The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, we're back, and this is Basil Chapman, Tiger Technicians Hour, and we're looking at a Dow that's up 98, the S&P is up 10, the comp index is up as well. So I just wanted to show you this quickly. I like to do these things in real time. Look, here is the 2-minute, the 5-minute, and the 10-minute E-mini. You'll see that you can take the high of the peak G in the E-mini right there. You can draw a trend line. I love these trends. So simple. Every one of you have these tools on your trading platform. You just take the highs. Sometimes I take the body of the candle. Mostly I like to start at the highs when I'm looking at outside moves. And you can see there's this Chapman wave. Oh, I meant to put my CD on. Chapman wave falling axe formation right here. And if there's a really nice break to the upside, in leg D, we're in leg D right now, the 5-minute chart, right? We're always looking for a peak A, peak B, peak C. The fourth highest peak, peak D is where other things can happen. Right here, we're going to see what happens to the, this is the E-mini, and it hit the 200 period exponential, that thick blue line, beautifully, and it's above the 9 and the 14 period moving averages, trying to head for 2501. As resistance. If we can get to 2503 in the next 10-15 minutes, I think most of the selling has been done. I see to subscribers to my opening call. We're going to try to grab some positions on a dip. I had a Chapman wave technical indicators say that there should be a rally of 9 to 11 points in the S&P. That helps the down the S&P to rally intraday, and then I'm expecting some kind of a pullback. On that pullback, we want to be doing some buying. We've done that. And now what we're looking at is the 5-minute chart has 2503.50 as a resistance to take out using the same methodology. Both of them are stalled. Now, what I would normally do, I take the time, even when I'm trading, I take the time to do it. When I don't take the time, I invariably pay a penalty for it because I miss what I should have been looking at right there. So it's right going into the Chapman wave inside track repellent zone. So if it can break nicely above it, that's going to be good. It looks to me like people are buying this market. Okay, so I just want to do a couple of little nitty-gritties there. The other thing is I want to run through these. Silver hit that 200 period moving average, the exponential moving average in the daily of 1547. I said that would be a target if it can get to anywhere but about 1525. Boom, it just hit it. The day's high is 15.46. And MACD is very strong. Stochastics at 85% has improved a lot. The unbalanced volume is strong. This is very important because that weekly chart has made a very nice cup formation. It's broken out, and it said on a short, I don't know how to term this, short to intermediate. Intermediate to me goes into the months. I'm looking at 2 weeks, about 2 weeks. Should be strong support in the 14.80 to 14.60 area for silver if there is a pullback. And now we're going to get into that. Let me just do that right now. Gold at this point is also made a new recovery high. The weekly chart is in leg C, testing the outer rim of the up channel resistance, and it's in leg G. I could have called this an alternate G/C. Just for now, I have no reason why I should call it anything else but G. Because remember yesterday I discussed if in 2 days it's able to close above the doji candle long wick of 1282.3 in the continuous contract, that suggests that you've established some kind of a support, near-term support at 1273, and that you could have another couple of bars above the wick high that I just mentioned. And if you start to pull back and you close underneath the wick low of 1.267.4, the same thing happens, and now you've got that little tiny candle right there that makes the doji plus sign. That's exactly where you find resistance around about 1274. Okay, got a bunch of those things done. Now let's do this. Yeah, let's just go to the dollar because it's really important to be able to look at the smorgasbord. Dollar did not take out the low of 6 days ago, that new trough A. The weekly chart is holding nicely on the 14-period moving average. Everything about it says there's an arch formation in the daily, there's an arch formation in the weekly, but we've had no breakdown in price, but the stochastic has dipped negative. Let me just do this. I want to show you something here. I usually put the rectangle in to show the M formation. Now, well, I shouldn't do this because I have to wait for the end of the day. But the MACD has crossed negative. It's down 0.04. So that's, I should put a circle, but I'll wait until the end of the day. But the stochastic's holding steady at 82%. And that says that the dollar is still finding buyers, even though under every other circumstance, I would have said that technical deterioration in the daily, if you said to me the dollar is at 97.50 and the MACD and stochastic are very good, and then you said to me, hey, wait a minute, the stochastic's very negative right now. It's the histogram's been way in the negative area, under the 0% line for a while, and you've got a little W formation in the stochastic at 35%. Where do you think the dollar would be? I would say to you 95.75, 95.80, probably even lower. No, it's at 96.36. Countries are buying the dollar as security. That's the only way I can look at it. How on earth could you get the dollar holding so well when gold has done very well? How could you have had gold holding so well when the dollar was rallying? These two are separated, but they have the same link. One is that there's strength in the dollar, because this is just my opinion. I'm not even sure how I'm going to ever be able to prove it, that there is strength because you've got international communities buying the dollar, not just funds. It's way more than funds. And the other is that you've got gold as a fear factor. That's the reason why gold is, now I can answer a couple of questions I got, one in the den and one in an email. That's the reason why I believe you're looking at the euro, EUR/USD, the euro not doing very much. Yeah, it's running a little bit. It's up 0.001, but it's up. Yeah, peak Dean is holding in that 1.14 area. But that weekly chart is terrible. It could move, but it hasn't moved yet. And if you look at the USD JPY, the yen is kind of doing what the dollar's doing. It's pulling back. But it's holding the 200-period moving average in the weekly, but it has got a one-to-one propeller shaft pattern in the weekly chart, made a peak D way back in the 114s, and that was earlier in just as October came into play, and now we're at 110.36. Not very strong, and the weekly chart is hinting that it could go lower, so this is something that I'm watching very closely. Look at crude oil. Crude oil at this particular point is up 56 cents. This little cluster pattern at the bottom reminds you of the one that it made when it hit 49.41. It hit 46.11 the other day. Let me double check. 42.36, good grief. 42.36, I was going to say, that's not right. 42.36, and now it's trading up a whopping to 45.18. Oh, no, that's a big move, but it's not big enough. So nothing to see here, folks. I'll be right back. Basil Chapman, Dow's up 64, S&P's up 6.5. Be right back. Tiger Technicians Hour. I'd love to take your calls.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
A bunch of questions came in. Okay, you remember the E-mini that I was looking at, and I said the 10-minute is in leg D, bumping up against resistance. The 5-year is in the Chapman wave inside track. I'm going to be giving a couple of courses this year. A lot of people have asked me about the certain techniques, and these are the techniques. Look at this. When you get a D in the 5 and you get a D in the 10, the 5 minutes should lead the 10, and that should be a hint. You could use a 2-minute as well. But look at that doji candle right at the stalling formation. Now it's on the 200-period moving average, the thick blue line at 24.8975. Just a perfect, MACD's turning down, stochastic's turning down. That was a perfect time to put in a short. Of course, I was doing the show, couldn't do anything. That's not to say you won't find support there and then a bounce, but this is exactly what you want. You want all your little ducks lined up, then boom, you can go in and you know exactly, once you're making a profit, you can make that a stop, make it a 10, 25 cents or whatever it is you're trading, stop, and then let it just run. And see what happens. Then, of course, you can draw the other pattern, which is the arch pattern. I don't want to take too much time now. I've got tons of questions. So question I had was, let me just finish these. I wanted to say that crude oil, so far there's nothing to see there. There will be, if it's able to rise $3 over the next 2 weeks, then I'll say, hey, now we've got something. Close $3 higher. TLT. This is going to be very important because if the TLT at 122.03, I said to subscribers, the 121 to 122 area, very strong resistance. Well, we hit the 122.03 area 5 days, 1, 2, 3, 4, 5, 6 days ago. Now we've pulled back a little bit, but the MACD you can see is trying to turn down, but it hasn't crossed negative. Stochastic has gone negative at 67%. My suspicion is if the TLT starts to pull back, money will be coming out of the bonds and going into equities. This is going to answer some of your questions coming up. Question again, Paul asked about stock market indicators like margin debt. I'll get to that. Let me just finish up here. Look, high-grade copper just down at the dumps. Wood, the iShares, timber and forestry ETF did have a very nice bounce off the lows, but it's gone from the 83.88 area in June down to the low of even today's low. What was that, 55? In the 55s, 83 to 55. Don't tell me that's not a bear market for the iShares. This is telling us about international. Now I'm going to start leading towards answering a couple of those questions. This fits into the category of what are we looking at? Let me just quickly do the TNX. Haven't updated it for a little while. That's the 10-year TNX. I don't want to go to my black background chart just yet because I've got a lot of other things to do. You see that the monthly chart made a peak D. Remember peak Ds where other things can happen? Look at that. It's the sharpest pullback you've had in any of the monthly peaks going to B and C. D is the deepest one so far. And that's saying that this 32.48 high of October is probably going to be in place for a little bit longer. And you could get bounces. But basically, I'm looking at yields as not being anything. Not only that, I was speaking to someone this morning. I said, you know, they were talking about the market and stuff. I see this person maybe once a year or something, having to play tennis with him. So, he's talking about the market, said he got out of cash. I didn't say I was talking about anything. He just said, oh, I got into cash and sitting in cash waiting for certain things to happen. And then we were talking about interest rates. And I said, well, you know, interest rates, have a look at your interest rates. We've been here many times before, certainly the whole of 2018. We've been in this area. And if you go lower, we've been here many, many times. So it's the direction that was fearful, the market was fearful of. It's not the rate itself. Pathetic. I mean, for those of you who are listening who were buying houses in the 1980s, 15%, 17%. I mean, them's the real interest rates. Okay, that's enough. Now I can get to the questions. So I'm going to go in order. So Paul asked first, he asked every day, and I've not really dealt with it. And I'm still not going to deal with it. But why I'm going to say, I'm going to Ed Yardeni's research right here. I want to show you a couple of things. I just picked this up now. I didn't know it would be Ed Yardeni's newsletter, Yardeni research front page. But this is very important. Table of contents, margin debt. That's already what I wanted to talk about. So I grabbed this and I thought, hey, that's really interesting. This is the Wilshire 5000. Look at the pullback to 1226. That's yesterday. Maybe it was the 25th, 24th. Maybe it's the 24th, and it was posted on the 26th. Well, look at this. Margin debt in red screams to that high level, makes an A, B, C, D, E, F, makes a peak F in the Chapman wave, and then plunges. I got the Wilshire up. I'll look at that maybe a little later. It's not important. It's like any of the other big indexes. So now look what's going on. It pulls back sharply, and if you look at the margin debt as a percentage of the Wilshire 5000, we're at lows right now. In other words, the margin debt from the over 2%, 2.8% area, almost 2.9, back in 2008, has been improving to the extent that as a percentage of the Wilshire 5000, it's way lower. All right. Now, if you're looking at margin debt, just pure margin debt, you'll see this whippy chart that I'm looking at. It goes all the way back to 1995. We're lower now. This is yearly change in $1 billion. We're on the way down. And that was in November. We're in the area we've been in many, many times before, but I'm talking about over 30 years, 20 years. No, 30 years. So if you're looking at this, it says the margin debt yearly change is declining in $1 billion, right? Now, if you look at margin, so keep these two in mind. So here's margin debt yearly percentage change. This is this on the year. So it's the same kind of pattern, but this is, I don't know what the difference is. They look pretty, they're not exactly the same, but they've got the same parameters. Okay, now margin debt requirement for credit extended under regulation TUG margin stocks. Look, 1973, oh, he doesn't have anything. We don't do that anymore. Margin debt in the S&P was obviously almost the same as the Wilshire 5000. So, all right, I don't know if no, I'm sorry, I picked that up, but it actually doesn't answer your question. I'm sorry. I'm going to get more into it this weekend. I think it is important. I think it's a very important question, but not my area of expertise. I'll be the same as if you were reading it, just it's knowledge, that's all. So I'll get to it. It is absolutely imperative that we monitor margin debt. I agree with you, Paul. It's going to be an issue. I don't think it's an issue right now. So next question I had is, would I look at Hi, Basil. Is this the bottom? How high can the QQQ and SPY get to? Now, while I was doing my work, I did actually have the TV on yesterday afternoon and evening, just trying to listen to what people were saying. Sometimes I just glean some information. Almost every person to a T was saying that there could be a rally, but we're going to have to retest the lows. That's the opinion that I've had for a little while. But I'm looking at this, and I'm going to come up with something over the weekend that I think has some different historical context to it. I don't want to presuppose that that's what I'm going to come up with, but so far what I've been looking at suggests to me that there is a chunk of work that has been done for us already. Some stocks are down 50 or even 60%. We'll talk about that when I get back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 63, S&P's up 7. Had a question from, where we go? We had a question from right here. I'm just, let me just check something else. I think, yeah, I've got it right here. Berkshire Hathaway, Lorna wanted to know about it. I featured this in my newsletter today. Actually, I've been speaking about it for a little while. Featured in my newsletter. I like the way Berkshire Hathaway's been acting. So there are a couple of things I'm looking at. Number one is Buffett is probably one of the geniuses of the world in terms of not being a stock picker, but a company picker. And from that, he became a stock picker. So that he doesn't just have the shares like fund managers, he has the companies. And when you look at this chart, other than this potential Roman candle we're looking at in the monthly chart, 224.07 was Berkshire B shares, insurance, banks, Apple, rails, whatever you want to name. It did not take out in this move from 227 to 186, the low of 26th of December. It did not even take out the June low, the low of 184.75. Granted, it's only 3 points away, but I think this is telling me that there's a systemic, not what you read, but what you look at in the chart. The little frog won't go away, huh? All right. The Berkshire Hathaway trading at 204.26, up 4.14, is something that tells me that there is a systemic internal series of arms. If you think of an octopus or you think of a tree, that Berkshire Hathaway is like the trunk, and then you've got the branches, and they're being well fed, and that something is going on that tells me that Berkshire Hathaway, unlike Cintas, presents other parts of the economy. This is overalls, uniforms, and rentals. Unlike Home Depot, which represents specific areas of the economy, housing and everything related to housing, going from 215 down to the 157 area. Hey, that is a whopper. I mean, look at Cintas. Cintas comes down. I should have an automatic percentage thing here. So it goes from 217 to 155. So if you think of it as 44 points plus 17, so that's 51. So it got cut by 25%. I mean, that's serious stuff. Now let's go to Berkshire Hathaway. So it tells me that other sectors within the economy are actually doing a lot better. And I've spoken about a rolling, I don't want to call it a recession because recession really is everything, but rolling corrections in areas, oil, home builders. Now you can just look at so many of these areas. Even the gold stocks are not doing all that well. But you can go all the way through different sectors and say, wait a minute, in terms of jobs, there's been a rolling recession in these now. I call it a slowdown, lack of job growth. But in other areas, really important areas, and in wage growth, there's been some fantastic work going on. Even if you look at the banks have had, look at this, XLF. It doesn't look too bad on the chart when you're looking at it just on the daily, but look at that monthly, 30.33 to the low just recently of 22. 22, that's 8 points. That is a big 7% or whatever it is. That's a big move down. So that I think is really important. And if I'm correct that the concept of rotation since the summer of 2010, where I discovered that that's really what was going on when we were anticipating, when I got that fantastic buy, that entry point in the Dow, the diamonds at the exact low of the historic 2008, 2009 crash. I was looking at that summer and say, gee, we should have retraced by now, and we haven't. And that said to me, there has to be some form where fund managers have said, this sector, that was the IBB, remember the biotechs, and then another sector was working so well that you got rolling corrections. And that's why the price very seldom had just 1 to 22% correction. Otherwise, they were all very small corrections. So now what I'm looking at is I'm saying Berkshire Hathaway, now I've got to go to Berkshire Hathaway again. So I'm going to say, I don't know why, the question, Lorna, is whether you are looking to buy it. I would say to you, if you have a long-term portfolio I would still say you have to have a stop, but you have to have a wider stop. And I would start a position. Preferably I would have had it under 200. I'm not sure it went. Oh, it went to 200.20. Let me just see. Berkshire. Yeah, didn't even have a pullback today. So I'm looking at this and I'm saying, have a little patience. If you're looking to buy this, I would nibble on it right here. I'd say 203. I didn't want it at 203. I would have preferred it at 195. No way, not getting it right now. It could later on. You probably will get an opportunity. Start a position here, and then at 190, somewhere in the 198 area, that's where I would start a position. And that's a position that has the potential, and you have to have a stop in it, but I'm just saying it has the potential that Berkshire Hathaway, over a period of 6 to 8 weeks, if it does not take, you could do it by next week. But if it hasn't by next week taken out the 186.10 low, and in fact it's traded nicely, it didn't have a price reversal spike. That spike was already a couple of days before on the 21st. It had a huge 14.9 million. I wish that spike was on the 26th. 3 days ago, I would have said to you, absolutely buy it right here and add to it big on every pullback, because that would say to me, you've got yourself at least 28 sessions of not retesting the low. But it didn't do that. But I still think that the way it's acting says that Berkshire Hathaway is something that you've got to consider as part of your portfolio. If that's what you were asking for, I'm saying yes. And to validate that, by a week from today, Friday a week, if it hasn't broken 195, but in fact is starting to trade at 207 to 208, that you have got probably a multi-week rally, and then we can start making decisions about Berkshire Hathaway. Is that going to be a Roman candle on Monday? Wow, it has the look of a Roman candle at highs. I have to consider that as something, because that says at any point in the next month, if there is a trade, a weekly trade, with a close below 194, there's a real good chance that we're going to go sooner rather than later down to the low that was made of 186.10. So just keep that in mind. So answer is yes. Next question I had was, let's see, this is a cell phone. Hi, Basil, is the bottom high? Can this, for the QQQ in the spot? Okay, I'll get to that right now. We've got a break coming up. As soon as we get back, I'm putting it right here before I forget. QQQ, right there, and we'll deal with it as soon as we return. Basil Chapman. Don't forget the sale that's going on. Don't forget my newsletter at the opening call right on the front page of TFNN. I'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Everyone, we're back. So look at this. Remember, I talked about the 5-minute E-mini? So it goes to that doji peak D, pulls back, and it goes from the 22500 area, and it goes down to 224.89, and now it's rallying. But what did it hit? It hit the blue line, 200-period exponential moving average. Boom! It's like a barrier. It's just like a cushion, like a trampoline. It bounces back up. And what has it done? It just stalled right at that trend line that I spoke about. It's called the Chapman wave inside track repellent zone. Let me just see if I've got that on my CD here. Did I close it? Did I shut it down? I probably did. Sorry, I'll do that another time. So it's a technique that I developed and I discussed in great detail. And here's that peak D. It's trying to break out in the 10-minute chart because that has a deeper slope. So we'll see what happens. All right. So just go back to Berkshire for 1 second. Berkshire, one thing that I forgot to mention, Berkshire B, is that the 200-period moving average is at about 203. And that was my target. I said to the subscribers this morning, 203 is going to be a bit of a barrier. It's actually gone over there. It's gone to 204.29. And Lorna said, thank you, Basil. I bought some this morning. Fabulous. So I love that. And a nice V-shaped pattern. And it's taking out all the left side in 3 days. It's taking out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 9 or 10 days worth of trading. I like that. Okay, now we're going to go back to the QQQs. So the QQQ trading up 80 cents right now at 153.86. So the question is this the low? Everything I look at suggests that there's we didn't get that VIX reversal that I love to see. We haven't had that for a while. We get it overnight. We get it sort of kind of intraday, but not the way I like to see it, where the news media, the cameras are everything outside the New York Stock Exchange. You have 3 days of front pages saying market is down. They usually say Dow's down sharply, down sharply, down sharply. And this particular instance, they've had it on the front pages, but a little picture, no big real headings. It could be there if in January we're there because you've got a new administration, you've got Democrats really vying up against the Republicans. It's going to be just news-wise, just go watch cartoons. 153.80. So I'm looking at this and I'm saying, I still have a target of the 200-period moving average of 138.10 after such a massive turn down. I can't see it just being, okay, that's it. But I think it's going to be rotating, and that's going to make it so confusing for people because there are going to be some indexes. For instance, I don't think the Qs are the very best at this point. They're up 0.44%. They're actually working on a percentage basis. Yep, last couple of days have been fabulous. But I think that a lot of the stocks still need time. And because they need time, My suspicion is I'm going to draw it in now. I said that I was speaking to Tom in the interview yesterday, and I said I'll start drawing in these patterns. So let me give you the big pattern on the daily. There's a big arch formation that's taken place, and let me put that into the context. So you've gone from here, the low of April, well, it depends on which index, but April of 2018, 153.88 is the low. And you've got this huge arch formation. And in a shorter time span, it took out that 153 low. It went to 143. So I'm looking at this and I'm saying, gosh, that acceleration to the downside creates a warp of the arch formation, a lopsided look. Now I have to go and I have to find a midpoint that kind of matches everything I want. And I have a particular technique that I like to teach that says, this is the candle that you look for. I'm not going to do that now. I'll do it over the weekend, and maybe next week we'll be able to look at it again. But what I am looking at is, I believe there's another arch formation, and it has two distinct patterns. One is, if it fails here, and we've got a news day on Tuesday, if by Wednesday afternoon, Thursday morning, it's taken out 155.50, the 14-period exponential moving average. This is the pattern that I'm looking at. It can go all the way to 165 by about the 3rd or 4th week of January, and in early February it starts to come down, and then maybe we make a March low. Remember, I'm looking at October and March. These are important dates for me, months. That's number one. Number two is if it fails by Wednesday afternoon, Thursday of next week, and by Friday we're trading in the 148 area, that's a completely different pattern. To tell you the truth, in some ways, I prefer the second pattern where it fails. And with everyone talking about a big multi-weeks, maybe months rally before we come back in testing, we fail very soon and we start to come down even sooner, because that gets us cleared out the best way possible. An absolute negativity, negative news, you've got everything there. You've got conflagration, and politically, you've got geopolitical conflagration, you've got gold rallying in fear, you got just a chunk of things going on, you've got that tariffs, I mean, you just name it. That would suit me wonderfully, because I would prefer, this is a much sharper decline. I had anticipated, so to answer your question, that we should have a rally. But if the rally fails sooner rather than later, it means we could be taking out the low that was made 3-4 days ago. That'll just knock the pants off every bull. They'll just throw up their hands. To me, that would be a fantastic, I'd love that. And then we just go down lower lows, and just the horrible, horrible news. Just get this cleaned out, and we can start a new mega bull market sooner than later. Okay. The other one is we got this big rally coming up, and people are going to climb in, and then they're going to start really getting in later in January, early February, and that's another top. And then we come back down, but we don't go to quite the low that in other words, then we go back to the Dow to give you numbers. You didn't ask about the Dow, you asked about the Qs and the SPY. I'm just going to use the Dow because the numbers that are just a little clearer in my head. So in other words, at 23,178, the Dow needs to get to 23,470s, 450s, somewhere in the mid 23,400s by about Wednesday of next week. Mustn't start to trade under 22,650, because if it does that, it's going to go lower. And that's actually the scenario I'd like, but I'm just saying that's the way it is. Just too many bulls came on in the last hours of yesterday and the day before, and everyone's talking bullish, bullish, bullish. That makes me very nervous. Not that you can't rally, but I think it puts a lid on the rally. Okay, so I think I've covered that. I'll cover it again on Monday when we're here. I want to see where we close today. Now, there are a couple of things that I'm looking at here. The question I got was FTNT. Did I not do that yesterday, or did I do it last night? When I was checking, I said, I forgot. Yeah, I can't remember whether it's Fortinet, data security products. I think data security is going to be part of the package of 2019. So it's trading at 70.21. your long via calls from 2020, January 20. Okay. So, okay, I like that. Your long via the calls, just as real long via calls in the Dow. I think that's a safer way to play most of the market. I'll be back. The Dow's up 35, S&P's up 5. I'll be right back to talk about some of these.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
These calls on FTN and Fortinet, and he also likes CRM. What was the question about CRM? And looking to enter CRM. CRM is Salesforce.com. You know, after their mega building that they put up and the top that was made this year at 181.19, I think this is the company that you want to be looking at, but my suspicion is, and I have had it almost on my newsletter, and then I said, you know what, I don't think it's ready yet. It's had a spectacular run from 120 to 135, 15%, but I've got a feeling it's going to need another. It's got the same second arch formation. You want to see in CRM, you want to see more like the FTNT. Look at this weekly chart. You see the potential cup. This is more like a chance of an H going to a lowercase h going to, I got my CD, I'll show it on Monday. The cup formation, the arch becoming successful because it closes decisively above the left side high of importance. That's 77.18, the high of the week of the 7th of December. So all I'm going to say to you is, yeah, I think calls are the way to go here. I need more evidence that FTNT is going to be able to rally from 70.21 by Tuesday. By Wednesday, it's really got to be up in the, even if it takes a breather, by Thursday. It's got to be really in the 71.70 or higher area. Then that's good action. And CRM, if you're going to play it with calls, it's a pity. I would have said to you on any pullback today, get it, but it's already at the recovery high. It's at 135.56. If you can see, if you want to buy calls, if you can see it trading back to the 132 area in the next week and then holding, not if the market's running. If the market's pulling back, it must pull back. If the market's running and it's not, I'm not interested in CRM. I actually think it needs more time. I think it's participated here, but it's going to need more time. So in this particular instance, I would stick to Fortinet and I would hold off on CRM, but you could start maybe one call right now just to get a feel for it, but that's not really the position. I would only do a position if it has a pullback to the 132s and that same day closes at 134. So that 132 level will be a good entry point. Hey, have a wonderful day. Check my opening call newsletter out. It's a fantastic time. You've got beautiful sales going on at TFNN. Just big discounts. Stay tuned for Steve Rhodes. And don't forget, you got Steve. I think Dave's still away. Yep. And you've got Tom O'Brien later this afternoon. Have a wonderful weekend. See you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.